Hello, good morning, Mr. Milfred. Today, my group and I are going to do our presentation on the company, which is NDB. I'll take the introduction and the overview of it, and my other friends will continue on with it. Firstly, I'll introduce what NDB stands for. NDB stands for National Development Bank. It was established in 1967 as the Rural Development Bank. Later, in 2007, it was transitioned into National Development Bank. Today, it is fully owned by the state through the Independent Public Corporation. Its headquarters is located in Waigani, Port Moresby, and with other branches spread across the country. The overview of National Development Banks its vision is to be the preferred financial service provider that stimulates wealth creation in Papua New Guinea. Its mission is to support local businesses, help them compete with foreign firms, and improve rural livelihoods. Core focus is on agriculture, SMEs, and partnership with government to expand its reaches. Its product it offers long-term loans to SMEs like fisheries, agriculture, microfinance, insurance, and training program. Thank you. That's the overview of NDB, and my friend will continue on with its bank asset sense.
For selected accounts and assets, the National Development Bank of Papua New Guinea primarily focuses on its financial reporting and on its developmental loan portfolio and the interest income generated from it. Therefore, here are 3 points to be considered and stressed out for Bank of Papua New Guinea on how it focuses on its financial reporting and its development. The points are balance sheets, loans and advances, income statement, interest and income and the reasons for selection. For balance sheets and loans and advances, as a development financial institution, loans and advances represent the bank's core assets, totaling approximately up to 229.6 million in recent years, which shows that it is one of the competitive financial company in the country apart from BSP Bank and Kina Bank. Therefore, outlines below are three key audit assertions: existence, valuation, and competitiveness. Existence verifies that the recorded loans exist and represent valid agreements with borrowers. Auditors often confirm this by inspecting signed loan contracts and security documents held at Waigani or regional branches. For example, inspecting a signed MSME loan contract for a cocoa farmers in East Sepik to enter the borrower is real. For valuation focuses on whether loans are recorded at the correct amount, specifically regarding expected credit loss or ECL provisions, because with height risk in rural lending valuation, ensuring the loan impairment provision accurately reflects the recoverable value of the loan book. For example, recalculating the impairment provision for a loan that is 180 plus days overdue to enter its book value is overstated. For competitiveness, it enters all loans disbursed to PNG citizens and MSMEs during the period have been captured in the financial statements and not omitted. For example, an auditor compares the loan investment records from the loan management system with the general ledger and its statement to ensure every approved loan is captured. For income statement and income interest, the definitions are interest income interest at the National Development Bank is the primary revenue earned from lending activities to citizens and businesses, typically brought to account on an accrual basis using the effective interest method. Audit assessments for interest income. Audit assessments are management claim that the financial information is complete and accurate. For interest income, there are three main critical assessments which are accuracy, occurrence, and cutoff. Accuracy. This ensures that interest income is recorded at the correct amount with error in calculation, without error in calculation. Reasons for selection. It is vital because interest rates at NDB may be fixed by the government, example at 6.5% per annum, or vary by subsidiary, example averaging 13% per annum. Correct application of these rates to the actual loan balance is necessary to avoid material misstatement in profit reports. Occurrence. This verifies that the recorded interest income represents interest earned by the bank from real transactions during the period. For its reasons for selection, this assessment prevents the inflation of revenue through fictitious loan or recording interest on accounts that do not exist. For NDB, it ensures that the income recognized relates to legitimate development credit provision to PNG citizens. Next slide. For cutoff, this confirms that interest income has been recorded in the correct account period. Its reasons for selection is since NDB uses an accrual basis, interest must be matched to the period it was earned, not just when cash was received. This stops the manipulation of year-end financial results by shifting income between years. Therefore, this bullet point number 2, and my friends are going to stress further on bullet point number 3. Thank you.
Okay, when talking about NDB, there are some risk and audit strategies for NDB. So that NDB or National Development Bank employs risk management and audit strategies, focusing on credit risk, capital market access, and the compliance with international standards. In 2024, it is issued as a USD 1.25 billion green bond and reported audited financial under IFRS with the highlighting expected credit loss measurement as a key audit matter. There are some risk and management strategies, some points to be considered, and one is credit risk control. NDB's largest risk exposure is to loans and advice. Many measurement of expected credit loss or ECL is a critical area requiring significant management, independent management judgment. Independent auditors identify as expected credit loss a diversification of funding sources simply means to reduce reliance on Russia's market post-Ukraine war, and this happens in the shifted strategies to deliver investors' bases. geographical risk mitigations, bond proceeds restricted to project in Brazil. Example like country like Brazil, China's, India's, and then South Africa's. Africa. Another point to be put into consideration is liquidity and balance sheet expansions. Fitch Ratings noted reduced strategies risk as NDB or National Development Bank continues to expand its balance sheet and attract new shareholders into the company itself. So there are some key facts and figures that table uh, in the year 2023. Event metric is green bond insurance. Very detail is the US dollars 1.52 billion US dollars on a 3-year maturity. And then another one is on bond pricing, SOFR plus 120 basis points. Another one is on investors basis, 32% of the price or 2.4% of other member states. Another one is at 2024 audit delighted IFRS compliance or compliant 2024 key meta audit meta expected credit loss on launch. There are some risks and challenges need to be taken by an NDB is geopolitical exposures, credit risk concentration, and then the other one is market accessibility. To summarize, NDB's risk and audit strategies emphasize credit risk management, diversification of funds, and strict compliance with IFRS auditing standards. It recent green bond insurance and delighted audit highlights both its reliance and challenges of managing expected credit loss in a complex geopolitical environment. So yeah, that's all, and thank you for me, and I'll end it over to the next presenter.
Our bullet point number 4 is additional questions. On behalf of our friend, he is not present here today, so I'm here to take his part on behalf of him. We have 4 additional questions and answers to be present. Question 1 is, the accounts you selected are materially misstated, not pervasive. What will be your next step? If the accounts have important mistakes, the auditor should talk to management and ask them to fix the mistakes. The auditor should also check more evidence to understand how serious the problem is. Question number 2, if the management and the board corrected the misstatement, what would be the effect on your audit opinion? Answer, if management fixes the mistake, the auditor can give a clean audit opinion because the financial statements are now correct and reliable. Question 3, if the misstatements are not recorded, what will be the impact on your audit opinion? Answer, if the mistakes are not fixed and they are only affect some of the financial statements, the auditor will give a qualified opinion. This means most of the financial statements are correct except for the specific problem found. Question number 4, if the misstatements are material and pervasive, what will be the impact on your audit opinion? If the mistakes are very serious and affect many parts of the financial statements, the auditor will give an advised opinion. This means the financial statements cannot be trusted because they are misleading. Therefore, these are the 4 points that we have summarized and explained it. So one of our last point is the conclusion, and our friend will conclude it.
Thank you once again. Uh, we uh, we have five members in the group. I'm the fifth member who is going to be concluding our presentations and sum up all our points. Thank you. In the conclusion, NDB plays an important role in supporting economic growth and development by providing financial service, loans, and opportunities to businesses and individuals. Though its service, NDB helps promote entrepreneurship, improve living standard, and contribute to national development. The organizations also support small and medium-sized businesses, which are essential for jobs creation and economic stability. Although NDB may face challenges such as financial risk and competition, it continues commitment to innovation, customer service, and suitable development makes it a valuable institution in the economy. Therefore, NDB remains an important driver of business growth, financial inclusion, and long-term development. Thank you all for that. That's our presentations.